Hey guys, welcome to Pippin and Dippin Academy. I'm Joe Von Grichton. We got Hunter, my partner, Hunter Burkett here, the Pip Hunter. Hey, before we get started, guys, please subscribe. I don't know if it's over here or over here. Hunter, help me out here. You got to point down somewhere because it probably,
I think it's here.
it's
It's either
that
here.
way.
You just pick one.
There should be a button for you to hit subscribe. Hit the subscribe button. That way you get notified anytime we have a new video. Also, make sure you put in the comment section, I subscribed. We will reply to as many as we possibly can. And the other reason is because we might just have a special giveaway. So make sure you put your I subscribed in the comments as well after you do subscribe. With that, guys, we are so pumped up today. We're going to share with you a strategy that one of our students used. Although we just launched Pippin and Dippin Academy, this student we taught privately a few months ago, and he's been using this strategy over the last like 3.5, 4 weeks, and he took an $1,100 account to $2,800. Pretty darn cool that he was able to do that. And so we were excited to share the strategy with you guys. Without further ado, I'm going to go ahead and hand this over to Hunter, let him dig in right now so he can screen share and show you the TDI or the Traders Dynamic Index that he's going to show you. I'm so pumped for this because he is like the king of this, and I'm excited for you to have the same results potentially as our student. So without any further ado, Hunter, I'm handing it over to you, man.
What is up, guys? How's everybody doing? This is going to be very simple. It's going to be easy. I'm going to try to go as fast as I can through this, but I do want to have packed with value in this video, and it's going to be crazy because it's just like, it's simple as saying a shark out of the water, back in the water. Whoever thought that you can include animals in your trading and make money with it, right? So this, just like Joe said, it's very simple. This is and that's the key in this market is simplicity, and that's the reason why the guys went. And I told him, I said, I'm not going to reveal his name, but I told him, I said, look, take this strategy, hone in on it, run with it. Don't focus on this one thing, and don't focus on nothing else. Do what I tell you to do on trading with the trend, which I'll show you. And he done it, right? He kept his head down. He focused on that, and now he's winning, right? Is it 100%? No, but if you do exactly what I'm about to show you, it's a good 90 to 95% accuracy. Okay. So what I'm going to do is I'm going to share my screen. Boom, boom. And we're going to be talking about the Traders Dynamic Index. Okay. What this indicator is like a bunch of indicators put into one. You've got your RSI, which is this blue and black line. And this is TradingView, by the way. They do have this for MT4 as well. Okay. So you got your RSI, you've got your market baseline, you've got your Bollinger Bands, and you've got another line in here. It's a signal line. I took it out because you really don't need it. I just use the RSI and the Bollinger Bands and the market baseline. Okay. And your extreme levels and this 50 line, as you can see. Okay. This black line in the middle, it's very vital. That's a big key of using this indicator. So what I'm going to do now is I'm going to bring the chart down. I wouldn't use it. You can literally take this method and apply it and start using it today, but I wouldn't do it because election's going on. It's like that. It's been pretty crazy. If you're not a seasoned trader, I would try to trade any of that stuff. So now finding what I'm going to be talking about, which I did. I explained the TDI. I'm going to be talking about trend trading, and I'm going to be talking about an area of value. I'm going to be talking about the ADR, and I'm going to be talking about the shark out of water, back in the water. And so you can know the terminology of what I'm saying. Okay. Now, as you know, that we do, me and Joe are market maker traders. Okay. So when you hear me talk about 3 to 5 days of rise or fall, that's what we use to find out what our directional bias in the market. Okay. We do integrate support and resistance to help us find out where key levels are. That price has been once and went back to the same price. So we do still use support and resistance, but we do understand the market maker cycle, right? And that's what we want to make you understand. Okay. So what I'm going to do, as you can see, when I say area of value, okay, where's price been multiple times, as you can tell right here. And guys, price, you can't just draw a line and expect price to stop there. This is a zone. Okay. Most retail traders, they get caught in this mindset of that the price is going to stop at their line. And it just don't work that way. You've seen price preach a line and completely go back the same way that it was going to move. Okay. And you're thinking, well, it broke out of my line. Why didn't it go in my favor? It's just the way that the market works. So as you can see, it's broken into this zone and rejected the zone. It even breaks the zone. We can even bring the zone down. Okay. Excuse me. So that's what I mean by area of value. Okay. You can draw trend lines in this area too. Let's see if we can pop in a trend line or anything like that. We really don't need to for me to understand that, for me to make you understand this. But there is other areas of value. We've got another area of value right here. Right here, we can start drawing these zones up right here. Okay. Here's another area of value right here where price has been multiple times. Okay, breached it a little bit, as you can tell. So this is pretty much just a consolidation period on a 4-hour time frame, even on the hour. Okay. So what I'm trying to get you to do is find out where your key levels are. Okay. Where is your area of value? Okay. So now I'm going to get rid of this. Okay. So it won't confuse you. Now I'm going to be talking about ADR, and this is vital in your trading because it's going to allow you to understand where peak formations are or where a possible reversal is going to happen. Okay, because this market only moves a certain amount of pips a day on average. Okay, and it moves that when I say 3 to 5 days rise or fall, that's what I'm talking about. Normally, a market maker cycle. Okay, and this is the reason why they do this, so they can trap traders, and most traders don't know this. Is this is how they move. And the reason why we're telling you this is because when you identify this thing in the market, you're in a perfect cycle, you're in a perfect setup. So if you're trading with the trend of the strategy I'm about to show you, the probability of you winning trades is going to be massive. Okay, so what I'm going to show you is ADR. What I'm going to do really quick, because it only shows it on a 15-minute time frame. I'm gonna put this indicator on. Now I want to show you this is GBP USD. Okay, ADR, average daily range. Okay, it tells me what it's moving in Asian. It tells me what it's moving in London. It tells me what it's moving in New York. Okay, on average it moves 125 pips a day. Okay, and when I remember over 3 to 5 days, that's when we say 3 to 5 days. Does it happen longer, shorter? Sometimes it does, but that's when you have to, you have to look at the key components of market maker and understand. So go back to your hour time frame because it's easier to find out your cycle on the hour time frames, is much cleaner. So as you can tell, market maker cycle is a confirmation of a cycle of a W, of B, V, M, and a M, A, A, W. Okay, that is a market maker cycle. Remember that. W, V, V, M, M, A, W. And as you can tell, and it's not going to be beautiful all the time. Okay, so you've got your W pattern here. You come up, you make another V here, which is another ugly looking W. You take off, but this is a 1, 2, 3 days of rise here. Okay, but this pair probably did reach its ADR in here. So we've got, remember, it's 125 pips a day. We're looking at 318 pips. Okay, so let's do the math. 125 times 3, 125 times 3 is 175 pips. Okay, so it was shy of like 60 pips, 55 pips. Okay, so that's normally that happens around, and sometimes that happens. Okay, it's not going to be perfect every time, but it gives you an idea. Okay, I'm going to be looking at reversal in this area. Okay, so, and what did it do? It made a peak formation, which this is a peak formation high. Okay, peak formation. It created your M. Remember what I said, M. Okay, ugly M. And usually a reversal on the 1 hour time frame for M or W, it happens over a multi-day. Okay, and like this right here. It started in this day, and then it formed in that day, and it finally took off. So multi-day. So it started in this day, formed in this day, and then it took off. So multi-day M pattern. Okay. So then boom, it took off. Look at this. A, a reversal. Okay, but over a period of time, let's look at the pip count. So you got your high, go all the way to your low. Let me mark this off and bring my, so 322 pips. Let's just say 325 pips. So it was shy 50 pips. You know what I'm saying? It's not going to be perfect every time. It's not going to be on the pip, but you can have an idea. Okay, man, I'm getting close to my 3 times ADR. You know, my 3 to 5 days. Let's look at the fall. 1, 2, 3, 4, 5, 6. So 6 or 7 days of fall, right? It took a little longer to do it, but that's when you go into the fact of you figure out where your ADR run is, and then you can figure out where you are in the cycle and where you are possibly going to find a reversal, right? But the real awesome high probability sets are inside this trend. So once you identify where you are in the trend, if you're in a downtrend, you can start to do damage in this market, guys. Okay, so I just wanted to show you that. If you have to watch this video again, or if you guys, we do have a Facebook group, me and Joe. If you want to work with us closely, we're going to leave the Facebook group in the description below. So click that, message us, and we'll message you back, and we'll get you in our group, and we'll work with you closely, and show you this in depth. Okay, we can't go over it in this one video because it'll take forever, but we do have a structured video course that will take you from point A to point B in the market maker method. Okay, so all right, now let's say we're in this cycle here. Okay, we're in a downtrend. We know that. Let's go do some damage with this strategy that I'm about to show you. Let's go to the 15-minute. Me and Joe trade off the 15-minute. We identify our area of value on the 4-hour time frame, even maybe the daily. We want to identify where we are in the cycle, area of value, figure out where we are in the trend, and we start to do damage, right? So let's go do some damage. So now let's start from right here, okay? We're in a downtrend. We're only looking for sells. I'll show you counter trades that you can take, okay? Look at this set here. Remember what I said, shark out of the water, back in the water, okay? What I mean by that, here's your left leg, okay? Now, I'm going to show you another little key component that will make this trade even more profitable, even more high probability when you integrate this with this setup, okay? And I'm going to show you some confluences that we use, okay? There's other confluences that me and Joe use. They're not here, but we'll show you that in a later video, okay? So you got, remember, it's easy as an M and W. This happens almost every day, okay? So boom, we've got a left leg, comes down, makes an M pattern, and then she's gone, okay? We're in a downtrend, you know that. Look at here. What do we got? This is called a shark fin. Shark out of the water, is out of the Bollinger Bands, back in the water, okay? That's what I mean by shark out of the water, back in the water, okay? Now, this is the same method. Our student used the same concept, everything that I just showed you, to identify the trend, identify area of value, and he used the same method to almost triple his count in 3 to 4 weeks, okay? So with that being said, this is an M pattern, okay? Now I want you to identify something that I'm going to show you, and I'll move on to another setup. I'm going to show you. You see price, okay? You see price right here, and then you see price here, okay? It's telling you one thing, but your RSI is telling you something different, okay? This is lower, this is higher, this is higher, this is lower. Wonder why, okay? What this confluence is called divergence. It's probably one of the most traded things in the Forex market is divergence, because what it's letting you know that there's momentum loss at that area, okay? Price is lying to you, RSI is telling you the truth, okay? Excuse me. So we're going to draw a trend line right here. Boom. Boom. Divergence. This is regular divergence, okay? This is what you call divergence. Now, confluence to take the trade, okay? For one, in pattern, diverts. You have your RSI crossing your market baseline and your 50, static 50. You want to have that crossing, okay? And then you've got your EMAs. Your 5 EMA is your yellow line, and your 13 EMA is, your red line is your 13 EMA. Okay. When those cross together, that's letting you know price is collapsing. Okay. You just can't take every cross. You have to put other confluences like I'm doing to make this happen. But this is a set. Okay. So now you've taken the set, you've got divergence, you got an M pattern, you're in a downtrend. The probability of you winning this trade is very, very, very high. Okay. So let's measure this out. So if you took it at the cross, let's look at the cross, and it's on this candle here. You've up 53 pips. Okay. Even if you held it to there, you're 82 pips, and you risked, if you went behind the shift candle, me and Joe usually risk 25 pips on the 15-minute time frame. So you basically, you're almost a 3-to-1, or you're a little over 3-to-1. Okay. And we'll be showing you in a further video how we set stop losses with an amazing piece of information that's going to blow your mind. Okay. So now let's move on. Okay. Let's move on. I'm going to show you a counter trend that will help you as well. And here it is. Okay. Now look at this trade. Okay. You're in a downtrend, remember. Okay. We'll go to the 1 hour time frame and look at this drop. Okay. Remember, it's just like anything else. Whatever goes down must come up. Okay. So in this drop right here, this massive drop, as you guys know, if you've seen the market, if you've been trading for a little bit of time, as you know, as the market drops, it's got to have a retracement. It's got to recorrect itself. Okay. So in that area, it was recorrecting itself. Okay. So let's look at it. This counter trend trade. Okay. So boom, look here, shark out of the water. What is price telling you? Look here, boom. What do we got? We got divergence. Okay. This is up here. This is way down here. RSI is telling you something different. Come on, let's look at it. Okay. So you got divergence for one. You got a market baseline cross. You got a 50 line cross, and you got your 13.5 cross. Take the set. Is this a high probability trade? I'd say it's in the 80s. Did you win the trade? Yes, you did. Because of your understanding how the market's moving, right? So there's your 50 pips. You're risking 25. There's the 2-to-1. If you went all the way up here, you're still 60 pips. You're still a 2-to-1 trade. Okay. It's simple. As a shark out of the water, back in the water, W pattern. This is a W pattern. It's a little bit more advanced W, but you can identify it with that shark out of the water, back in the water. Now look, boom, you roll into the next day. You're like, yeah, I'm up. I'm gonna look for my shark out of the water, back in the water. Look here. There's a beautiful trade. Okay, what do we got? We got a shark out of the water, back in the water. We have divergence. What is the price telling you? It came to the same area. It's directly across from each other. Okay. You've got a doji here. And guys, you can integrate with more confluence. You can integrate candlestick patterns, which we will show you in a future video. Your morning stars, your engulfing patterns. Them are very key in this too. It's just going to help you understand that the confluence is even more powerful. Okay. When you integrate candlestick patterns like your morning star and your engulfing patterns. Okay. What you did here. Look at this bullish engulfing pattern, and then boom, she's gone. So if you integrated that too as well, and that's all it is, guys. That's all it is to be consistent in this market, is to have rules in play. Follow the rules, and you will, and have risk management, and you'll win. Okay. That's all you need. Okay. Boom. M pattern, divergence up here. Boom. 13.5 cross of the market baseline, cross of the 50, set. Morning star, set. Okay. Let's move on. Let's see if we can find another one. The trend changed here. I'm not gonna feed into that right now because that's election. But here's another set. It's more of an ugly M pattern, but you still have it. Okay. You still have it here. You got your price coming down, coming back up to the same area. What do you got? This is that area on the RSI. This is that area, but it came to the same area. So the wick here, okay, boom, cross to the market baseline, cross to the 50, 13.5 cross. You had a little bit of drawdown and eventually dropped. Okay, not bad at all. Okay, and you won that trade. That's what you want to be looking for. That's a 100 pip trade, guys. Come on. And all you're looking for is shark. What it didn't give you. Sometimes I will allow it to be, you know, if it's touching the water, I still consider it as a shark out of the water, back in the water. I mean, it's an M pattern. That's what we're looking for. M and W patterns. Okay. M and W patterns. That's what you want to get in your head. So that's pretty much it. Joe, did I cover everything, brother?
Yeah, man, you covered way more than I thought you were going to. This is awesome. He gave you tons of nuggets. The big thing is, guys, is one of the things you saw there. He showed you a counter trend trade, which is against the trend. It's, you know, if you're a beginning trader and you're just learning market maker, we wouldn't recommend that you do that. Like he said, you would be looking more for trading with the trend. So if you know that you're in this downtrend cycle, then you'd only be looking for sells. And if you're in an uptrend cycle, then you'd only be looking for buys.
Yeah.
The big thing is one of the things that's really cool is, Hunter, do me a favor right now and just do what you did before, where the bars are off your chart and all we can see is the TDI. Let's go back through and circle some shark fins and see, just trading it naked, not even looking at bars. Let's see if we can see some shark fins at extreme areas and see if there's entries there, and then go back and check them real fast, and see if they were valid entry points.
I'm just going to circle all of them, even with no trend and trend. So there's 1, 2, 3, 4. Here's another one here.
Yeah, there's another one there.
Okay. And I'm going to bring the chart, like, you want to bring the chart back up? Okay, so let's look at it. Okay, so there's one shark fin here. Okay. One shark fin here. And guys, I guarantee you we can go to the 5-minute time frame. That's an M pattern. The reason why I know that is because I've been trading a while and I can understand, I can read the candlesticks. So let's just do it. Let's go to the 5-minute. Let's go find the sucker now. Let's back this way. There's your M pattern there. And looky there. There she is. Look at that. Look how perfect that looks. You know, you got boom, boom. What is price telling you? I mean, what is RSI telling you? Shark out of the water, back in the water. Divergence. This stuff is like night and day, guys. I mean, all you got to do is integrate this. This is a proven strategy. This stuff works. You know, if you want to be a beast in the market, just trade like this. Just find your trend, find some M and W's, and make it happen. Use the TDI. You don't even have to use the TDI if you don't want to. You can use just the RSI and use divergence and make these trades happen. The reason why we do this is because we wanted to be where it's simple for other people that don't understand hard technical stuff, right? So let's go back to the 15-minute time frame, and we circled that. Boom. Here's another shark fin. Boom. Took off. Another M pattern with divergence. Boom. Drop. Shark fin. Drop. You're in a downtrend too. So that was a nice look. Remember what I told you. You can take this set too. We got a nice sharp shark fin with a morning star or evening star. I'm sorry. Evening star. So what that means is you got a bullish candle with a doji. Okay. And then you got a bearish candle. And then your doji sticking out of the top right there. It's an evening star. Vice versa would be morning star. Okay. So boom. And then you got another shark fin here. 5-minute W guaranteed. The reason why I look at the candlesticks, you've got a drop, you've got to bring back up with a bullish engulfing, and then you got a drop, and then you got another bullish engulfing. What do you think that is? That's a cleared W pattern on the 5-minute time frame. Is it a counter trade? Yes. Can you make money off that? Absolutely. But you have to identify where you're at in the market. You have to understand. Okay, these are very high probability setups. And I want to stress one more thing before I hop off here. We hop off is, look, guys, I want to go to one set. I want to mark it. Okay. Let's just take this beautiful set right here. We know that's an M pattern. Okay. This is on the 29th of October. Okay. Now, I can't stress this enough. The dollar index is a perk. It's a secret. It's a strategy. It's a cheat code to your trading. You're trading GBP USD. Use the dollar index to your advantage to understand where the dollar is going, and you'll understand where GBP is going, USD is going. Okay, so let's pop into the DXY, which is the dollar index. Let's go to the 29th, and what did it do? What did it do? Look what it done. It rose dramatically on the 29th, okay, of October. And what did GBP do on the 29th? It dropped dramatically. Okay. So, and what could even give you a more high probability is understanding where you're at on the DXY, right? You're in let's go the hour time frame. Okay. On the 29th. Look at there. We're at a bottom here, area of value. We completely shifted our trend, and we were in an uptrend at that moment. Okay. You can also tell if you're in an uptrend or not when you're above the 50 EMA. This is a 50 EMA. The white one is a 200 EMA. The dark blue one is an 800 EMA. And I told you what the other two were. Okay. We use these for other validations too as well. And we'll be talking about that in future videos. So we're going to link that. We're going to link that in the description below. We've already shot a dollar video. We went over the perks and the stuff about the dollar index, how you can use it to your advantage. We're going to link that video down. Go watch that one too. Go watch that one. Watch this one together, and I guarantee you, you're going to be a sniper. You're going to be a sniper in this market. Okay. So, Joe, if I haven't missed anything, brother, I think we can kill it.
No, man. Like I said, you gave tons of value. So just to kind of reiterate what he talked about, understand your ADR. If your price action, basically if your currency pair has run 3 times your average ADR, then you know that you're looking for it to consolidate, do a multi-day consolidation, and then it will reset and either continue in that direction or it's going to reverse. Typically it reverses after it runs 3 times ADR. But it doesn't always take 3 days. It doesn't always take 5 days. Sometimes it takes 2.5 days, like you saw on the earlier markup that he was showing you. So just know where you're at in the count, where you're at in the trend, trade with it. The trend truly is your friend. We can't stress that enough. And we're not saying trade with all the retail traders and the trend that they're following. Trade with the market makers. We're going with the market makers. And so trading those shark fins, knowing where you're at in the cycle, if you can do those 2 things and then find those M's and W's, you're going to be highly, highly successful. It's a very simple strategy. Like I said, you could remove the bars off of your chart and just look at the TDI when it's at extreme areas where the shark fin goes out of the blue bands and it's around the extreme highs or the extreme lows, then we know that they're going to be really good setups. It usually is the first leg of a very, very good setup.
This is what he's talking about, guys.
Yeah.
Right here. Yeah. Overextended. This is at the 75 area. Overbought.
And you can see there, that was, if you got in that at London session, it was over 100 pips for the day.
Yeah, and then 100, literally, guys, 100 pips out of this move here, you're done for the day. You think about it. If you ran a 100 pip move on this pair and you had a 0.25 lot size on here, that's $250. Do you have to go back to a job if you're getting those gains? $250 a day keeps the 9 to 5 away. Remember that.
Yeah. And guys, it's just simple. If you stay disciplined, you are patient and wait for the shark fins, you know where you're at in your cycle or your trend as far as you're in an uptrend or downtrend, you're going to be wildly, wildly successful. Just like our student, And he works a full-time job. So he trades on the 1 hour and the 4 hour. He doesn't even drop all the way down to the 15-minute and get sniper entries. So, and he still did it that way. And he didn't have to manage the trade as much because he was on the higher time frames. He kind of could just walk away from it for a couple of days.
I'm glad you said that too, Joe. This happens on every time frame, not just a 15-minute. Yep. This happens on the 1 hour, 4 hour, daily, weekly. It happens everywhere. You just shark out the water back in the water. That's it. It's a simple strategy, just like Joe said. Simple
strategy. And it's even easier on the higher time frames. The lower the time frame, a little bit harder to spot, but it's still very, very doable. So Hunter, man, you killed it. Like talking about ADR. Thanks, he gave so much, like he started introducing you to divergence. He's a marketeer that way. He was like seeding you for future videos that we're getting ready to do.
Yeah, we just gave you a quarter. We just gave you a quarter of our course, for free. And that's the reason why, is we really do care. I mean, me and Joe's went through, and we're trading partners. We've been trading partners for a long time, and we went through the trial and error. We've went through trying to figure out this stuff. Spent thousands and thousands of dollars on mentorship and things like that to figure it out, right? So, and that's why we're trying to give back, so we understand the power of Forex and what it can do for people, and how it can, set them free.
Yeah, awesome job. So guys, just he talked about the dollar right at the end. If you haven't watched our DXY video on the dollar and the dollar index, how you can use that to look for setups with US pairs, definitely go watch that. We'll put the link in for you for that video so you can go and check that out. We also have a mindset one. So like, if you're, worried about like being new, and the biggest thing to overcome, if you can control your mindset and be patient and manage your risk properly, you will be wildly successful in Forex. And you don't have to risk a ton to do that. I mean, it's been proven over and over again. People that have mentored Hunter and I both, they've showed us it takes very little to make a lot. The biggest thing is discipline, mindset, just being patient and looking for those setups, looking for those shark fins, the M's, the W's, and knowing where you're at in the trend. If you know those things and you're patient and wait for those, you will crush, absolutely crush. So with that, guys, thank you for watching this video. There's tons of nuggets there. Like Hunter said during the video, watch it over and over again. Go do your chart markups, go back on TradingView and scroll back and mark the shark fins with the TDI indicator. Mark them out and then go and look and see like if there were wins or losses or pushes. Maybe they're scratches. Usually the shark fin is not the entry point. The shark fin is just the representation that a trend change is coming. All right. So it's usually the first leg or the peak, if you will, that you want to trade away from. And so you're looking for an entry just to the right of it. So with that, guys, thank you so much for watching the video. Hunter, great job today. You crushed, man. And
you too, brother.
Oh man, I just look good. I'm just pretty. So, hey guys, until we see you next time, get back to Pippin and Dippin, and we'd love to hear from you. Remember, subscribe below. All right. And put in the comments that you subscribe so that we can reply to you with some good nuggets. And then those lucky few might just get extra little gift from us too. So
yeah,
that, guys,
I'm thinking of the gift of like, which we'll put it in the next one. I mean, we might be giving away some money. We might be giving away a one-on-one mentorship. How about that?
Ooh, a one-on-one mentorship. So Hunter's going to personally fly to your home and he's going to mentor you.
Oh yeah.
Well, only if you live in an exotic beachfront location. So, but with that, guys, hey, we hope you enjoyed the video. Stay tuned for the next one. Make sure you subscribe so you get notified right away and you don't even have to worry about when we put them up. They're typically Tuesdays and Thursdays, but that may change in the future. So subscribe so you don't have to worry about missing, and we'll see you at the next video. Take care, guys.
Peace.